Hello, everyone, and thanks for joining us today. I hope everyone can hear me. If you can quickly put it in the comments or in the questions at the bottom that you can. I'm Anu, and I'm joined by Steve and Lee. We are a part of the customer success team at Snap Projections. In our today's session, we'll be creating a simple client plan called Woody Keller from the beginning and run a recommendations calculator. Then in the second half, Steve will create and customize a client report for this plan by using our snapshot feature to present a client-friendly report. The session has been reviewed by FP Canada and qualifies for 1 CE credit. We'll share more details on this process shortly. We'll be recording today's session, so if you need to revisit anything that we do or if you miss a section, we'll send out the recording shortly after the session ends. If you have questions during today's session, please submit them through the GoToWebinar portal by clicking on the question mark. We'll do our best to answer your questions during the session today, and if not, we'll get back to you by email within a few days. 2 hours after this session is completed, attendees who stayed for the full session will receive an email with the video recording and a request to respond with your full name and last name for the CE certificate. Once you complete the submission, form, you'll receive a personalized CE credit by October 31st. Now, today's agenda is to show you how you can create plans by the use of simplified and conservative assumptions to begin the planning process with your clients, how to interpret and reconcile the cash flow on an annual basis, how we can calculate recommendations such as sustainable spending for the client, and then Steve will take us by creating a simplified summary with using our snapshot features to help with the client understanding and action with the reports. We'll also be answering your questions live in between, and then definitely give some time at the end. So let's quickly get started with creating this plan. So I'm going to go ahead and open my Snap login. Now, when you log in into Snap Projections, you will see an interface like this when you get started. On the top left-hand side, you'll see a list of all your clients. Here on the top right at these two buttons, you can go to a help button, or you can click at your initials to take a look at your billing or change your subscriptions, anything that you want to do from billing and subscription standpoint. Now, for our client, because this is a plan we are creating from scratch, I'll click on New Client and get started. So our client's name is Woody Keller, and I just want to make sure my screen is looking good. Okay, so we're going to type in the name, Woody Keller. We're going to set up the date of birth, so 1965, January 1st, and the province is Alberta. So I want to ensure that I'm in the correct province. Now, when we do just input just as much information, a few things have changed here for us. So let's address what we'll see on this 3-level menu. So first is our clients. We can still go back to our client list. Then it's telling us where are we. So we are under Woody Keller's plan. We are inputting information for Woody, and our scenario name is base scenario. That's our starting scenario. Then we have these two icons that we can click on. The first one is a scenario notes, where you can update some initial information or any notes for yourself that only you as an advisor can see. And then you can click onto this 3-line, or what we call as a hamburger menu, where you can either rename the scenario, copy the scenario to create multiple plans, or delete the scenario. Then on the second level menu, which is the place that will get us to complete a full plan for this client, we are first under scenario setup that gets us to update all the information that Woody Keller gave us for his 2024 financial situation. Then onto the planning pages, which is a spreadsheet where we are able to spend some time looking and analyzing at all the years of Woody's plan from now until the end of the projection. This is the place where advisors spend a lot of time to review numbers and see projections. So it's a really helpful page to focus on. And then finally, we can go onto the client report, where we are able to create and customize a client-friendly report for our client. Today, it's Woody Keller. Finally, we have this 3rd level menu, where you will see a few tabs here. First is for Woody. So we are under Woody's tab and we are updating information for him. If we would have added a spouse in here, we would see the spouse name here, and we could add and toggle between the two tabs to see Woody's information. And if you were to add in a corporation, then we would see that information right here. So this is important to get started and start to feel comfortable when you're using Snap. Now I'm going to quickly go through the information that Woody gave me. So I'm going to click on next and look at the next entry. So our next entry is a general page where we are able to start off with some assumptions for this plan. So first of all, our start year for the plan is 2024. If let's say you're creating a plan for your client almost at the end of the year, you can choose to have the plan start as of January 1st, 2025, assuming that all the values are based on the start of the year for the next financial year. Then the retirement age, so Woody's planning to retire at 65, so we are keeping that, which is also our default. And the projection until age goes up until age 100 for Woody. So ideally, the plan is going to start from now until age 100 of Woody so that we are able to analyze and review his projections. Now, next, we look at some of the FP Canada assumption guidelines values that we see. Our inflation rates, so we're staying with the guidelines. The general inflation is at 2.1%. Our indexing for CPP and OS is at 2.1% as well. Next is our assumptions on rates of returns. So we have cash, fixed income, and equity. Now, I did lower the rates of returns for our client today because we want to factor in the management fee. So we have made cash at 1%, fixed income 2%, and equity at 5%. But in case you do want to use the FP Canada projection assumption guidelines, you can go at the very top, click on use guidelines to adjust it to those values. And if you want to get more information on it, you can go under our link right here to gather more information on what those guidelines are. Now, one quick tip, if you're like coming back to Snap and you're not sure what entry are we going to do for each of these sections, we have these really helpful tool tips. These are these gray question marks that you can hover over to understand what the software is asking us to input or expecting us to input at that for those entries. And it's really easy to get through this information. And you'll find these great question marks in throughout our projections and Snap. So you can always use them as your guide to get you to complete a full plan. Now I'm going to go to the next page and we are going to look at the expenses section for Woody. So the software is looking at our first entry for base expense. So this is the amount that we can input based on our clients after retirement, after taxes value. So for our client Woody, he did let me know he wants to spend 54,000 each year during his retirement after taxes as his lifestyle spending. So I'm going to go ahead and put in that amount right here, 54,000. Something to keep in mind when we are inputting base expense is we don't want to include anything that the software will ask us later in the projection. So things like under assets or when we go into the planning pages, we can enter some savings for the client, or the debt section will have a debt column of its own. Similarly, insurance premiums or even RESP, if that's the case for your client situation. We don't want to double count them. So we only want to keep the lifestyle amount or anything other than those entries under our base expense. Then we can also use a section called additional expenses. These would be occasional non-reoccurring expenses for the client or one-offs that a client might have. Some really good examples are travel, car renovation, even gift to children. So we can enter that under additional expense. For Woody, he did mention he loves to travel. He wants to travel after when he retires. So the amount he said is about 5,000. We are setting it at general inflation to keep the expense consistent to inflation. He plans to start this expense when he retires and end it by his age 80. He also mentioned that he wants to do this expense every second year, so it's not going to be consistent, so we can use this frequency column. And I will go ahead and highlight this. So this vacation shows up as a separate bar on our chart, so we can highlight it and talk about it with Woody. Now with that, we're going to move on to the next page, which is our incomes page. So under the income section, we already have a blank entry. So I'm going to use that. This one's pretty straightforward for Woody. He did mention he's working, he's employed. His amount is 120,000 that he's making. We want this to also match in our general inflation. So I'm going to highlight this and simply press backspace to make sure that we are tracking this at general inflation. The type is employment. We do have some other types of entries under income that you can make. Then this is a taxable and an RSP eligible entry, but we can select different options depending on what type of input we are doing. Then the from age is blank, so the software knows that it's starting already. It is a consistent entry and an input, so we can leave it blank. And the to age ends automatically at 64, which is perfect because Vidi is planning to retire at 65. Now, another entry that we can do is for pensions, which is a defined benefit pension plan. However, with my discussion with this client, he let me know that he has a defined contribution pension plan. So I'm not sure where to enter this. So let's take a look at how we can use our help section to figure this out. So on the top right-hand side, I'm going to go to the help center. And under the search the knowledge base, I'll type in a DCPP input, or I could have typed defined contribution pension plan. And there's an article that shows up here. So we can now go to enter the DCPP account details. That's exactly what we need. So it tells us under scenario setup and assets, under the financial assets section, under assets tab, we can click on add financial asset, and it has the DCPP option there. So that's perfect. I know exactly how to enter a defined contribution pension plan, and that's great. Similarly, how I searched this little article, you can actually go to our help page and find out any information that you want, any input that you're not sure about. If you're just getting started, you're not sure where to begin with, you can click onto our tab for start here, and it will show you a lot of articles to get started creating your first projection. We have our product walkthrough that we do every bi-weekly, or some other webinars and videos. I personally recommend you to watch the video tutorial because these are short videos that will get you started with using Snap and will make you feel more comfortable as you watch each of these. So you can watch these while you're working through a client plan. Now, back to Woody's plan. We know now that we don't have to enter the defined contribution under the pension section. So we're going to go and take a look at our next entry, which is the asset page for him. So Woody did let me know all the asset accounts that he owns. So I'm going to update them here. We are starting with a blank entry right here. So he has multiple RSPs, but I'm going to club them all together. The value is 450,000. The type is RSP/REF. Now we do see the default rates of return here, but what I'm going to do is I'm going to change the asset mix for each of them because they're different for different accounts. So let's update them correctly. And when I click away, we are able to see the total rate of return for this account. And that's how it's going to be for all the other accounts that I add in. So there's also a TFSA of the value 130,000. And this one's all in equity. Then there's an investment account, which is of the value 140,000. And that is a non-registered, so it is updated the cost base for us. And this one's in 20% cash, 10% fixed income, and the remaining in equity. And finally, we'll add the DCPP account right here with 20% fixed income and 80% equity. And when I click away, all the entries complete. We don't have any error, so it's looking good. Now, for financial assets or for any accounts, there are a lot of things that you can make and update in any plan. But because for Woody, we are keeping this plan really simple, I'm going to go ahead and take a look at our next entry for real assets. But in case your client plan, and in case for your client plan, if there's more information that you want to enter or update, you can either go back to our help page to look for that or reach out to us and we'll be happy to help you out. Now, Woody did mention that he also owns a real asset. So I'm going to add one. It's a home. and the current value is 550,000. So we're going to enter that. This is the current market value. He originally purchased this for 300,000. So we're going to enter that. The appreciation is 2.1%, which is general inflation, and we're good to keep that. There are two more sections here or entries we can do under future purchase age or future sale age, which can be helpful if you want to input the age or use the gear icon to be more specific with your entry for maybe downsizing or upsizing real assets, or in case the client plans to buy a home in the future. The capital gains tax is no here because this is Woody's principal residence, so we can leave it at no and then click on our next entry, which is the debts. So Woody did mention he has a mortgage on that home he owns. The balance is 45,000. So I'm going to set that up. The interest rate is 4.5%. So these are some really straightforward entries. Future start age. This is for any mortgage that's going to start in the future because this is an already owned debt. We're going to continue with it without entering anything right here. The repayment option is interest and principal for this mortgage. The monthly payments is $800. So I'm going to set that, and it's not tax deductible. But under the real asset entry, I'm going to link it to the home. And the reason why we want to do that is in case Woody plans to sell this home in the future, and if there's any amount owing under this mortgage, the software will automatically be paying off this mortgage before using the proceeds for investments or buying another real asset. So it's helpful to link the real asset for any associated debt there is. Now, the next entry we have that we are going to is the government benefits. So our values for CPP and OAS. Our initial value is for the CPP and OS to start at 65, which is perfect because Woody is going to be retired by then. We're going to start the CPP and OS. Now we can enter the CPP or OS in two ways. First, if we already know the amount that our client is receiving, we can enter the value right here under the annual retirement pension section. Or if we are not sure what amount our client will receive, then we can use a percentage of maximum scale, which is a 0 to 100% scale for the minimum or the maximum that Canadians receive in their CPP at the age of 65. For Woody, because he's been fairly contributing for a while towards his CPP, I'm going to set this at 70%, which changes our value. And then the indexing rate for CPP is the same, which was a part of our general initial assumption page, which is perfect. So let's continue with that. Similar for our CPP input, we have the OAS input. It's starting at 65. We have the annual pension here because the percentage of maximum is 100%, which works for our clients today because they have lived enough number of years in Canada to qualify for maximum OAS. The indexing is at 2.1%, which is perfect. Now we're going to go on to the next entry and complete the insurance plan for Woody. So he did mention that he has a term plan that he got when he was age 55. So we're going to add that right here. So I'm just going to call it a term 10. We can select term. We do have a whole life or universal life option to add in for insurance section. I'm going to put the insured person as Woody. He started this at 55 and the coverage is for the next 10 years. So a term 10 works for him. So it starts from 55, ends at 65. The death benefit is $500,000 and the annual pension, annual premium is $860. And the beneficiary is 100% estate, so that works for us. Now, for Woody, this completes all of his financial inputs that we had for him that we could gather. Now, for your clients, there could be more information, like maybe you want to run a life needs analysis calculator. Maybe there's an RESP we want to enter or make some changes under settings or even add a corporation. You can go ahead and do that. But I can now pause at this point because our inputs are good. And we're going to look under the planning pages to then look at the numbers for Woody. But before that, I would just want to pause quickly and see if we have any questions related to scenario setup and the entries I've done so far.
Thanks, Anu. Awesome work so far. We actually haven't had any questions come in, which is amazing. So everything's been clear. If you do have any questions, please submit them through the GoToWebinar portal, and we'll be happy to address those throughout the session.
Awesome. Thanks, Steve. So It's perfect because now we can go under our planning pages to look at what's happening with Woody's and the projection for him. I don't really have to go through next until the very end to look at the planning pages. I'm going to simply click onto the planning pages text and the button, and it will take us to the entry. And sorry, it will take us to the planning pages. Now, when we click onto the planning pages, we'll come across this screen, which initially looks like there are a lot of numbers and a lot of columns that we are looking at. But the basic idea is that once we get more comfortable with looking at these, they're super handy and we'll be able to make a lot of changes and address a lot of things for the client with this section. Now, the idea is that whatever we entered under scenario setup, so all the entries we did, they are now columns in our planning pages. And each year, the value changes with either inflation that we have set up for these accounts or these entries, or if you're looking under asset accounts, then they're changing by the rate of return year after year in value. So let's go and take a look at the first year and go from left to right to take a look at all the columns that we have for this client and see what entries did we originally do and how it has changed our plan. So from the far left, we have the financial year. So we are looking at 2024. The age is 59, which corresponds to the year for Woody. Next, we're going to go to expenses. So our expenses shows up as 75,826. But if you remember, we did not enter this because this has been created by the software automatically and calculated based on the leftover amount that our client has. Once from his employment, we have taken care of some of the set expenses we had, like debts and premiums, and even insurance and even tax payouts. So let's see how we come up with this value under our expense section. So this is our base expense, which is the lifestyle expense after taxes. Then under additional, we have the vacation, but it's starting at 65. So the entry for this year is $0. So nothing is going as an expense under vacation. Then there's an employment income, 120,000, which we did enter. The CPP and OS is starting later at 65, so it's 0 at this point. Then we have the income tax section where the software is able to tell us what the taxable income is, what is the CPP and EI deduction value, and what is the total tax our client is paying. Now, these two are expenses and they will reduce the employment income by that amount. Next, we get to see the tax rates. So these are more for our understanding perspective. What is the marginal? What is the effective tax rate our client is paying in each of the years in this column? Next, we are able to see the financial assets section. So under the financial assets, we'll see all the asset accounts we added for Woody. We're able to see the value, if there's any contribution, and what is the rate of return for each of these accounts. So currently there are no contributions happening, so there's nothing that's going towards savings for Woody at this point. Next, we're able to see the real asset. So we started off with the real asset amount, and we are able to see it under the real asset column. We have the debt section. So what is the owing? What is being paid? So if you guys remember, we had $800 that was going monthly towards the mortgage, which comes up to $9,600 as the total annual payment that Woody will be doing towards mortgage, which is an expense. Similarly, we have the insurance. So the death benefit and the premium. The premium is also an expense that Woody is paying towards. Then we get to see this balances section, which is really helpful because it gets us to see the total net worth year after year changing. Either it's increasing or decreasing. We're able to see estate before tax for each of the years, and also what is the tax on estate for each of the years if our client was to pass away in any other year but age 100 until we have the end of the plan. Now, with all of these set expenses that we had here, taken out of the 120,000, Woody is left with about 75,000 to spend in the first year, and that's how the calculations happen until Woody retires at age 65, and we see this 54,000 come up, which was the value that we originally entered for Woody. Now, what is happening before retirement is what we call as manual cash flow. Because entries have been done manually, we simply see a final calculation by the end of it. And what's happening after retirement is automatic cash flow. Now, because entries before retirement are on all manual, Woody did let me know that he's doing two contributions towards his RSPs and TFSAs. before he retires. So he mentioned that he's doing about 15,000 annually under his RSP and 7,000 under the TFSA. And these are pre-authorized contributions, so we can now enter them right here. So what I'll do is I'll take a look at this RSP account, take a look at this contribution and withdrawal section. We're going to click onto the $0 and we'll enter the annual amount of contribution, so 15,000. I'm going to click on copy down to 864 and click onto this blue check mark. So we're able to see these values. Then before running anything else, I'll also do the TFSA contribution for Woody. So 7,000 annually. He's trying to maximize his TFSA. We're going to copy down to 864. And now we have both the updates. They are in yellow highlights because they are overrides. They are manual overrides done by the user. So they're going to show up highlighted differently. Now, we do have this notice right here which says this scenario has been changed. Please rerun the scenario to see the updated results, because the software lets you make multiple updates within the plan, but we're going to compute it by clicking on the run scenario button, which saves us time to update it each time after each entry is done. And that's how we are able to show these two packs under the RSP and TFSA. And let's take a quick notice at this base expense value and how it has dropped from 75,000 to now almost 59,000 because some amount is getting allocated towards the savings. So this is all pre-retirement. Now, what happens when Woody retires at 65? So once Woody has retired, we're able to see that we're getting him to spend 54,000 as his after retirement, after taxes spending, which is then adjusted to nominal values to inflation. It comes up to about 61,000. And then there's the additional expense vacation entry as well. Now, because the software knows what amounts the client is looking to spend post-retirement, what it will do, which is a part of our automatic cash flow, is it will take a look at the incomes that the client has for all of these years. And if there is not enough income, the software will go ahead and start to decumulate the financial assets in order to achieve that spending goal for the client. And here we are able to see there's decumulation happening from non-registered. There's these LIF minimum withdrawals happening because that DCPP got converted into a LIF at the time of retirement, which we are able to see right here. So this is all good and everything looks pretty good at this point, but how do we exactly determine if this client is funded enough for his retirement or if he's underfunded or overfunded? So there are two ways to figure this out in Snap. First, we can go at the very end of the plan at age 100 to see if we either come across any pink shadings, which will indicate the plan is underfunded, or in our case, because we do not see any pink shading, chances are our client is doing good. But how much is he overfunded with? We can also figure that out. So if we go under financial assets section, we see all of these columns for different account types. And in the final year, we see that there are these balances left over, which tells us that there is some excess money lying around. But I want to see a total of all of these values. So what I'll do is I'll go at the very top and click onto this arrow to collapse our column. And we can do that for any columns to collapse them and to see either a total of it or to just like shrink in our planning page over one screen to look at all the numbers together. And in the and that what it does, it basically puts all these columns together along with an all type column that gives us a total of this account. So when I go into the very end, it tells us that the client has a total overfunded amount of $400,000, which tells us that the client is doing okay and they are overfunded. We can also then take a look at the net worth, the estate taxes to take a look at the total amount that's left behind in the final year for the client. Now, a second approach to taking a look at this summary is to go under the recommendations button. So I'm going to click on the recommendations button and we get these two cards that gives us a little summary of the client's retirement status. So Woody is planning to retire at 65. We know that. The retirement spending is 54,000 in real dollars, which is the current situation. Then we can see that the gold status is overfunded. The gold surplus amount is 413. We know where that is coming from. And the gold surplus is 109%, which indicates that the client is doing pretty good with their retirement plan so far. So This could either complete a plan for us, or if we want, we can give Woody some other what if situations to look at. And for that, we can use our recommendations calculators to maybe run through another what if plan. So we can maybe take a look at adjusting his retirement age. Maybe he can retire sooner. Maybe he can get a big lump sum today and still be 100% funded for his retirement. Now, available savings, because he's overfunded, it's going to show up as a negative value because he can save less and still be fully funded for his retirement. So that's another calculator. And then one of our most popular calculators is sustainable spending, which is able to tell us what is the maximum that Woody can spend if he wants to and still be 100% funded for his retirement. So I'm going to click on this and see what the software is able to share to tell us here. So the answer is about 56,495, which is almost about 2,500 more than his current plan, which is perfect. So I can either apply and run this directly in our plan to change that 54,000 to 56,000, or because I want to share this as another what if with Woody, I'm going to check mark copy scenario before applying recommendations and click on apply and run. The software takes a few seconds and it will create a new plan for us, which is our base scenario, sustainable spending. So it's a different plan. Now, if we take a look at the retirement year, we're able to see that that 54,000 has changed to 56 along with the vacation expense. And if we go to the very final year to take a look at our leftover balance, I'm going to collapse it to see all types. It's almost $0, just about 270,000 left, but the real asset still stays there because that's the home that Woody is currently living in. And that with that, we can now complete one plan where we're going with what Woody's looking to spend for himself, and another where we could share a suggestion for him where he can look at spending slightly more and still be 100% funded. Now, with this being done, we can go into the client report and create a report for Woody to show him all of these projections in a really client-friendly form that Steve will show us in just a few seconds. But I want to check if we have any questions, Steve, on the planning pages and everything that we presented so far.
Yeah, a couple of questions. Thanks so much, Anu. The
Yeah.
first one is how to enter employer contributions. So if a client has a retirement plan, a DPSP or group RSP, where would you enter in those group contributions?
Absolutely. I think that's a really good question. So we can always go to the help section to take a look at employer matching or these group benefits. It will show up some of these options right here. So group asset accounts, we can review this article. But if you're working on any plan, when you go under scenario setup in assets, we have some of these settings that setting options that we can use to change these assets or update information. Our group benefits go under employer matching, where I can then select, maybe let's say this DCPP had a group benefit or the company was matching a certain percentage for Woody. I can go under employment income, that's what the value is. And let's say he was putting 5% and the employer was putting another 5%. So I can update that percentage. And then when I go onto the planning pages to see this in actual effect, we will go right here. I'm going to expand this column to see all the values. So here, Woody is contributing his own 6,000 and the employer is matching that amount each year, which is simply being added. And this 6,000 is coming from his portion of income.
Perfect. Thanks, Anu. And
Yeah.
there's a couple others that we can likely get to towards the end. But one other one that came in is
Mhm.
just confirming whether the base expense value is net of tax.
So yes, this value is net of tax that we are entering either under our expenses section or because I'm running under sustainable, this is being calculated by the software. And when we say net of tax or after taxes, it is because we have a section for taxes which is separate and the software treats this as an expense already. So the expense is taken care of on, and this is net of tax value under the base expense.
Perfect. So yeah, the base expense value is how much the client has available in their pocket for expenses and items outside of the projection. So that is net of any other transaction you see on a year-to-year basis.
Absolutely. Awesome. Thanks, Steve. So I'll pass over to you as the presenter and maybe we can go through the client reports.
Perfect. All right.
Thank
Thanks,
you.
Anu. So now that we've gone through the scenario setup, we've input all of the client data, we've reviewed the planning pages, and we're comfortable with all of the numbers, the final step is to go to the client report, where we can create a custom PDF to share with our client. And this client report involves 3 phases. The first is a report builder section where we would select what pages we want to include and in what order. Once we have the structure of the report in place, we would then go to the report editor, where we can customize the information on each and every page of the report as needed. And then the final step would be to review the report and make sure that it's going to meet all of our needs with the client. Before we get started on the report builder, I just want to mention a couple of resources or ways that you can get started on what to include in your report. The first thing that you can do is actually just simply generate the current version of the report for this plan based off of your default settings. So when you click Generate PDF in the top right, Snap is going to use all of your default existing preferences for the report setup, and it's going to use the current plan data in order to provide you with a PDF for Woody. So then we can open that and take a look at what would be created if we just went ahead with the default settings. So you may have your cover page with a customized logo and a selected background. We'll show how to structure all of this shortly, but this just gives you an idea of what would be available right off the bat. As you continue through the PDF, you can see things like the default note to reader. There's information available in the snapshot. So these are all of the summary charts and tables. And then there's things like a blank goal details page that you can add custom text to. There are assumption tables. So it gives you an idea of what content is available and what it would look like and what you might want to add or remove from the report. In addition to reviewing the report that Snap would generate for you, you can also go to Help in the top right and click on Help Center. From here, you can search for Sample Report, and you'll see that we have an article called Snap Projections Toolkit. And this has a lot of tools and accelerators to help you in the planning process. So examples include the financial planning questionnaire that you can send to your clients to gather the data you need to create your plans. It also has things like the new financial plan checklist that helps you to go through and make sure you've considered everything important to the plan. And then there's the sample reports. So there's a short version and a long version. If you click on it, you can download that file. And then this again can serve as a reference point to know what information is typically included in pages of the Snap report. How can you structure that to be client friendly? And how can you add in custom summary text? So this is another great resource that you can start with when you're creating your custom file. So now that we have those 2 resources, we're going to go to Report Builder and get started with selecting the pages to include and the order for them. So on the Report Builder included pages, there are 2 sections. There's the included pages, which lists all of the pages that would show up if you downloaded the current PDF. And then there's the gallery, which is all possible pages that are available given the current projection. So if it's a single client or a joint client, if there's a corporation or RESP, that's going to determine what pages are generated by Snap and available for the report. But everything that you could include is listed in the gallery. And you'll see that if the page is already being included, then it has a strike through the title of the page. So cover page is included, we can see that here. The note to reader is included. If we were to remove a page from the report, so let's click on goal details first, for instance, and either drag that out of the included pages, or we can click on it and hit delete. Now you'll see that goal details is no longer has a strike through. You can click on it, and if you wanted to include it, you would just drag it into the list in your desired location. So that's how we can add and remove pages from the report. And to reorder them, you just drag them up and down as needed. So now that we can customize the pages, let's go to the top and decide how we want to structure this report for Woody. So you can either create a 1-page report, which just uses this new snapshot functionality. You can create a larger report and have the snapshot summaries as an executive summary, which is what we're going to do in this case. So we're going to leave the cover page. We're going to include the note to reader. Then we're going to have our snapshot summary. For the purposes of our plan, we're going to reduce the 10 summaries that are included by default down to a total of 6. And this helps us achieve two things. One, it's going to make sure that the 6 summaries fit on one page. And two, it's going to allow us to focus the conversation on the most relevant information for Woody's situation. So if we go to the top, we're going to leave the goal summary in the plan. We're going to remove the assumption summary. And again, I can either drag that out to the left, and that's going to get rid of it, or I can drag it to the right. The reason I'm removing it from the snapshot is because we're going to include the larger details version that has more assumption information that Woody can review. We're also going to remove the net worth statement summary for similar reasons. We're going to have that later on in the report. So we'll delete that from the report. We're going to get rid of the expense summary and then the recommendation summary. So now we're left with our 6 snapshot summaries that are going to fit on one page, and we have the option to reorder those if needed. So for that, I'm going to drop the financial asset flows down with the estate summary. And this is just a way, an optional way to kind of structure a story within the snapshot. So we have the goal summary and status at the top. Then we're going to have some charts that show what the net worth is, what the retirement income is coming from, what contributions or withdrawals are being made for the next 5 years, and then what the final result is within the plan. Continuing on through the rest of the list, we're going to click on goal details and we'll delete that from our included pages. Right now it's a blank page that we could populate if we want, but we already have lots of details about the goal in the plan, so we'll remove that secondary page. We'll continue scrolling down the list and we'll remove the asset allocation chart, the estate details, because we already have that in the snapshot. And then the last step is we're going to take the net worth statement details and just move that to the top of the net worth section so that we start with what they have today and how that's projected to change over time. So again, as you're doing this, you could refer back to your default page that was created already. So you can look at what content is in each of the pages, whether you want to include it or not, whether you may want to reorder it, or you can use the sample report to get an idea of what is possible and what looks good. The great news is that now that we're done customizing the report, we can save those settings for all future client files. So if you click on defaults at the bottom and then click save current page settings for new scenarios, that's going to make sure that every new plan that you create for a new client is going to have these same settings. So you can always tweak them or customize them as you need, but you'll be starting from your base desired point. So now that we've customized our report builder and we've saved our preferences, we'll go to report editor so that we can review each of these pages and make changes if needed. So on the cover page, we see all of the selected pages on the left now. On the cover page, we can customize who it's for, who it's prepared by. We can enter in our logo and then select a desired background from the list. And again, once we've done customizing this page, we can click on defaults and then save current page settings for new scenarios. And we're just gradually building up our ideal template so that we can save lots of time in the future and have a completely customized template form to pre-populate every time. I'll click next and go to note to reader. I can leave this, add language, or replace it if needed. Then we go to the snapshot section and we can get a sense of what's included here. So there's the goal summary, and this provides the retirement timing, age, date. It shows us how much Woody is assumed to be spending before retirement and then after retirement. And the most important thing I want to emphasize here is that these values are not static text. They are dynamic templates, which means that anytime that you change a number in the plan or change a setting, these are going to update automatically for that new client file or for that new plan for Woody. And you can see the template variables on the right and use them in any language that you want to add to the plan. So if you want to reference specific values or timing, you can add a new bullet and we could say additional travel of 15,000, oh, sorry, of 5,000 every other year, starting at, and then we would go to Woody's age, and then we would put in, and then Woody's retirement year. So you can use those values so that if you change the plan in the future, it'll automatically update. And then if you wanted to save that as your default, again, we can come and save the current page settings for new scenarios. We'll go next to the goal status. So this just shows that they are overfunded in their base projection with the target 54K spending, and that they could, if they wanted, increase that spending goal, or it could result in leaving a higher estate for their beneficiaries. All right. And so we can continue to click next and progress through each of the pages. You'll see some of them are just charts and tables that you may not be able to edit. And in other cases, there's going to be the opportunity to add comments. So as we continue on, you can see the content that would be included. And then once we start getting to the full page details, you can see that there's quite a bit of information available. We can add comments at the bottom. So if there are additional assumptions that are material to the plan, you can enter those here. There's charts, and again, you can customize these as needed. You can use the legend to add or remove different sections, and you can add comments to explain any large spikes or to clarify anything. And we would continue on through each of the pages until we arrive at the last one, which is recommendation details. And this just provides a blank commentary section where we can add in an overall summary of the plan. So I've pre-created some language for that. So we're just going to congratulate them on their current situation, tell them what to do next in terms of ongoing contributions, and then outline what we'll cover in our next meeting. Now that we're done with the report editor and we're happy with each of the individual pages, we can now go to the report preview, where all of that will come together into the final PDF. So we have our customized cover page with our logo and desired background. We have our note to reader, our one-page snapshot with the goal status, our notes that we've added, some nice summary charts. And then as we continue on, there's lots more supporting information in detailed full-page views. As you review the report, it's important to consider two things. The first is the questions that your client came to you with that caused you to do the projection in the first place. So this could be questions like, am I going to be okay? Am I on track for my goals? To address that, you would point to things like their summarized goals, their goal status, the net worth over time, and their final estate. They might also have asked you about what to be doing on an ongoing basis in terms of contributions or withdrawals. So we have things like the financial asset flows that shows where their money is going over time, or if they were in retirement, it would show the withdrawals being made. So first, we want to make sure that the report can address the questions that have been asked. And then the second thing is we want to review the report to make sure that we're comfortable with it. We're aware of what the assumptions are and what is being reflected, so that if the client has any questions, we'll be able to either address those live or get back to them shortly after with clarification. And so that could be things like, within the estate summary, there's a row for nominal and real. The nominal value just means that that's the actual amount that the estate will receive in that future year. And the real is giving you an equivalent purchasing power of that future estate discounted for inflation to today's world. So it's saying, yes, there's lots of money at the time of estate, but if you think about it today, that would purchase a condo in Toronto, for instance. So it just helps to give context to that future large value. If you do want to get help with any of the questions or make sure that you do understand these things, then you can go into the help site, Help Center, and you can search for things like nominal, and you'll see that we have articles on real versus nominal, what the differences are, and examples that you can provide in client conversations. So consider the report and see whether it's going to answer the questions that you need it to, whether you're comfortable with all of the numbers, and that way you'll be ready for your client meeting. And to do that, you would just generate the new PDF, download that file, and that's the one that you would share with Woody in this case. So that's everything for today's structured demonstration. We wanted to leave some time at the end for questions that have come in, so please feel free to keep sending those in if there's anything that we can clarify or any questions that you've come across. If we aren't able to get to it, we'll be sure to respond to you by email within the next couple of days. As I wait for any questions to come in, I just wanted to mention one thing. A reminder that it is now possible to use Snap fully in French. So if you want, you can go to your user settings in the top right corner of the software, and then you can change your language preference from English to French, and that's going to translate the entire software. So now that I've updated, sorry, you can tell that I'm not familiar with French, so I'm not as comfortable clicking buttons at this stage. So we'll return to clients. And now we can see that everything has been translated. You'll still see, the client's name, but the formatting, the columns, everything has been translated and formatted in French. So I'll check in with Lee and Anu to see if any questions have come in.
Thanks, Steve, for that amazing way to show us how we can edit and create the reports. So we don't have any report creation specific questions, but I think a really interesting one came on the planning pages, that why the withdrawal is non-registered before registered assets. So if you could quickly talk about the cash flow management that's our default, and how we can change it if needed.
Perfect, yeah. So going back to the planning page, we saw that at retirement, that's when the cash flow management is turned on by default. We have our target spending, and then Snap is automatically withdrawing money from the various accounts. And we can see that the majority of that is coming from non-registered assets. That's being driven by what's called the cash flow management order in the software. So if we want to control that setting, we can go to the top of financial assets and click on the teal blue box to go to show CFM order, cash flow management order for this scenario. And that's going to add a few new columns to the planning page. So we have the cash flow management order for contributions and withdrawals. And we can see that the default is to take money from the non-registered account, then the TFSA, and then to defer the registered account as long as possible. This is a default tax efficient drawdown that is based off of research from both CFA Institute and the FP Canada Research Foundation that's now been rebranded. And basically what it shows is that by deferring registered money as long as possible, you reduce the likelihood that a client will run out of money before they pass away. So this drawdown in particular is really focused on longevity. If a client has a different goal, maybe they have more than enough money for their retirement needs and they want to focus on their estate tax efficiency, then it's possible that a different drawdown strategy would be more efficient. Maybe they want to start withdrawing registered money right away. In that case, you could change the withdrawal order to something like registered, then non-registered, and leave the TFSA as an estate planning tool. So we can make that change, apply it to the projection, and then you'll see that Snap will automatically recalculate everything given those new desired assumptions. So now everything's coming out of the registered accounts. There's no TFSA or non-reg asset withdrawals until the registered accounts are depleted. We do have a detailed webinar that we did fairly recently. If you go into Help Center and then to our webinars list, we had a session called Help Your Clients Get the Most from Their Money in Retirement, and that went more in depth on the research that was mentioned and how to change and apply different withdrawal strategies to your projections, and then also how to compare them and have a conversation with your client about the right approach for their goals.
Hey, Steve, it's Lee here. Just jumping in quickly. I just wondered if you can highlight the whole grabbing hand versus pointing finger mouse on the planning page.
Yes, good idea. So within the planning page, when you have your cursor anywhere on the table structure, there's two ways that you can use your cursor. You can click on the table and then drag your mouse around in order to move the table. So sometimes that can be quite a bit easier to move up and down than going to the scroll bars at the bottom or right-hand side. So you can click and drag the table around as needed, or you can also click on specific numbers. So for instance, if I wanted to change the employment income as of 2029, you'll see that I can click on the 133 and change that figure. Because the cursor can be used for multiple purposes, and because both of those pieces of functionality are important, it can be important to consider which is going to happen when you click your mouse. So if you see right now, my icon is a hand fully extended with the fingers out. That means that if I click, it's going to give me the ability to move the screen. And once I move my cursor over top of a number, you'll see that it's now a pointer. It's just a finger pointing. And if I click, it's going to change that number. So if you're ever having difficulty interacting with a number, if you can't get it to come up and be able to edit, it's likely because you're just outside of the considered box for that number. And you'll see here, I have the full hand. So I'm clicking, it's not updating the number. What it's trying to do is let me move the screen around using my cursor. So those are the two ways that you can interact using clicking and your cursor. If you want to change a number, just make sure that you're right in the middle of the number itself. And I'll just mention one other thing before we tackle another question. We recently added a new feature to the clients page. So if you go back to your clients, you'll see that there's this new client ID tag on the left-hand side of the client list. This is a custom client-specific number that is generated by Snap when you create a new client file. This can be used to put into your CRM or any notes system that you have if you wanted to use more generic client language or client names within the software. So some people like to use initials, or they have a code system where they use numbers to represent their clients just for additional client privacy. If you want to do that, you can now use this new client ID. You can copy that, put it into your system, and then once you want to search that client file up, you would just put the number into the client ID cell, search, and that's going to bring up that client file. So that's a new tool that's available for organizing and searching for client information in Snap.
That's awesome. Thank you, Steve, for showing us that. I was just wondering if you could also show us how, let's say in this case, sorry, before that, if you could show us like how we use this use case and we gathered so much of information for Woody. Is there a questionnaire that we can use to do that in Snap? And if there's maybe a checklist that we can use to see if our plan is complete and ready to be presented?
Yeah, so if we go back into the help center, I mentioned with the sample report that we have what's called the Snap Projections Toolkit article. And I would encourage even the most experienced Snap users, so both new and experienced, to come and consider some of these tools to see whether they might be helpful for your planning needs. So the first is the financial planning questionnaire. So that's here where you can download either a short or long version. And this has all of the data that you need to collect to create a Snap plan in the same order that you would need to enter it into the software, that you can send to your client. You can customize it for your own branding and advisor information, send it to your client, have them fill it out, and then use that to create your projections in Snap. We also have checklists in order to help you to create your first plans. These are more related to new users of Snap or people returning after a while to make sure that you've considered everything that needs to be input. We have the sample reports that we talked about a bit earlier. We have examples of what the value of doing a plan is that you can share with your clients. We have an article that also talks about how Snap works with advisors in order to create financial projections. And then we have things like the completed financial plan review checklist. So this is a tool that can help you after you're done creating a plan, just almost be a second pair of eyes to offer you considerations to make sure that you haven't missed anything and that you're identifying planning opportunities that might be available.
That is awesome. Thank you, Steve. Now, I know there are a few more questions coming in, but I'm looking at the clock and I don't think we might have the time to address them. So we'll definitely reach out to any of those questions that we could not respond to right now.
Awesome. Yes, we'll get back to you shortly. We'll also be sending out the email with the recording to the session, as well as a link to fill out your information to receive the CE credit. So please provide us with your email and name so that we can send that CE credit shortly. And then if you do have any thoughts on the session, if there's anything that we can improve going forward or anything that you enjoyed that you'd like us to do again, please feel free to respond to the email and let us know your thoughts. As always, we appreciate you joining. Thanks for all the questions and let us know if we can help with anything else.
Thank you, everyone.